Hi there and welcome to this webinar, Reinventing Recovery Audit for Today's Retail Environment by PRGX. Recovery audit has historically been a reliable stopgap for retailers to ensure any leakage is eventually captured. But in today's retail environment, it is even more critical to ensure processes and systems are correct up front. This webinar will outline how retailers will benefit from an industry transformation to move from a contingency fee-oriented recovery audit to a prepayment and error prevention solution. The webinar will also outline the value of error prevention and typical error prevention strategies before examining the preventive audit approach and solution. Before we begin, I'll cover off some housekeeping items. Firstly, if you have any questions as we move through the webinar, please submit these using the question box and we'll address them at the end. Please also check your audio, and if you're having trouble hearing us, let us know in the question box also. And lastly, be sure to follow us on our social channels, LinkedIn and Twitter, to keep up to date with PRGX and to access our content. So to get started today, I'd like to introduce our presenters. Mark Kilgore, Vice President of Global Client Development, joined PRGX in September 2009 and is responsible for global account management. Mark has more than 20 years of experience in consulting and client services, including roles at Bearing Point and Infosys Consulting. Amy Andrade, VP Global Account Executive, is currently managing client relationships for several top multinational retail accounts and has 23 years of retail recovery audit industry experience at PRGX. Amy focused her first 6 years in audit operations and the last 17 years in major account management across retail portfolio, sales leadership, marketing, and thought leadership. Brad Royer, Regional VP for North America Grocery, currently leads the Grocery Centre of Excellence for PRGX and has over 25 years of audit experience with clients from grocery to discount retail. Brad brings a high level of industry knowledge from successfully managing client relationships across the finance, merchandising, IT, and supplier business functions. At this time, I'll now hand over to Amy.
Thank you, Ashley, and thanks to everyone for joining us today. We're looking forward to the discussion and sharing how we are rethinking the traditional recovery audit process and evolving our approach into a new solution that enables retailers to prevent errors before they occur. As Ashley said, as we walk through today's presentation, please go ahead and submit any questions you have as they come to you. Then we've allowed time to address them on the back end of the discussion. Before we get into the details of our preventive audit solution, we wanted to first provide some background and acknowledge today's retail recovery audit situation and some of the main complications and challenges we've seen with implementing an error prevention solution. As we all know, the retail environment has many inherent complexities, and as a result, there's always been leakage in the source-to-pay process. This is why retailers have consistently relied on recovery audit as the key stopgap for making sure that anything that slips through the cracks is eventually captured. For over 50 years, recovery audit has been an industry best practice for retailers of all sizes and geographies around the world and across all retail sectors for a few reasons. Number one, it ensures retailers are actually receiving what they've negotiated with their suppliers. It also drives cash back to the bottom line through the recovery of overpayments and under-deductions. It identifies points of leakage for opportunities for upstream process improvement. But despite all these benefits, the ultimate goal of a recovery audit has always been to use the learnings from the audit to fix the issues that caused errors and eliminate recoveries going forward. We have been able to help clients reduce recoveries in certain areas, but overall, year over year, errors persist. So why has it been so difficult historically to implement a true sustainable solution for error prevention? Well, first, retailers are understandably focused on their core business. Fixing processes or systems requires investment, and retailers typically prioritize investment dollars for areas that drive sales, such as merchandising and store operations. Also, deals are getting more complex. With new retail channels such as mobile or digital, more complicated promotions and funding models, increased data volumes and new technologies, things are always changing, and managing even the traditional promotional areas is more difficult today than ever. Root cause recommendations are provided by audit teams to support our clients' efforts to fix errors, but we often find our recommendations are rarely acted upon, primarily due to the reasons we already mentioned, but also because the information is often dated, since we're typically auditing in arrears. It's important to call out, too, that the current traditional recovery audit business model and compensation is predicated on identifying errors post-payment. And while this is what recovery audit firms are hired to do, it also means that the activities and incentives between retailers and recovery audit firms are not really aligned for error prevention in today's model. So, where did this lead us and why now? Well, it's time for the recovery audit industry to innovate. And given the demands that retailers are facing today, we knew we needed to evolve to meet the changing needs of our clients. And the combination of advancements in technology with our retail recovery audit experience provides the innovation and knowledge needed to develop the solution. So as the recovery audit firm serving the largest number of retailers in the world, we knew we had to ask ourselves, how can we help retailers and suppliers identify and correct errors before they occur? Well, we have devoted our efforts and investments to better align with our clients. We've developed a new technology-enabled solution with highly configurable workflow that can integrate into your current environment. The PRGX Preventive Audit Platform leverages our retail expertise by deploying our core recovery audit capabilities upstream in the process. It ingests daily data feeds and provides a daily reconciliation of your deal and sales planning systems, highlighting the gaps between the contracted funding and the planned performance to correct errors before the promotion occurs, based on business rules that are established with our clients. Our solution isn't a replacement for your deal system. It actually complements your existing deal systems. And the workflow can occur within the PRGX platform or be enabled via email workflow outside the system. Our solution can't correct all the errors, but it can reduce errors by up to 60%, delivering significant value to our clients. So this is what we want to share with you today. Brad will go through the details of how the solution works, and Mark will share how it delivers value for both retailers and their suppliers and discuss how to get started. But before I turn it over to Brad, we wanted to give you a brief description of the investments in our Veragon solution suite, which is our tech stack that facilitates the preventive audit solution. Because as mentioned earlier, technology has made this type of innovation possible in combination with our retail recovery audit experience. It begins with our Epiphany data foundation, which is built on technology that enables us to ingest, process, and standardize large volumes of both structured and unstructured data at much greater speeds than ever before. Our Panoptic platform is the other key piece that facilitates a preventive audit review. It's the configurable toolkit and workflow engine, adaptable to any client environment, accessing data feeds and using logic based on our retail experience to monitor your contracts and plan performance and flag potential errors to correct them before the promotion occurs. Lumen Advanced Analytics, while we're not focused on it today, is a separate module in our solution suite that enables us to bring additional value to our clients beyond error prevention by analyzing clients' data and providing detailed analytics to support better informed business decisions across the source-to-pay continuum. So I'll go ahead and turn it over to Brad to provide a more detailed explanation and context around how our solution works. Brad?
Thanks, Amy. So our technology stack will enable us to do three things on a real-time basis. The first is to monitor the cycle on an ongoing basis until the performance is initiated or the rebates are billed. The monitoring will enable us to identify any instances where there is a lack of funding by SKU by week. The discrepancies will then initiate a workflow that will notify the appropriate persons with details that will assist them in taking the corrective action. I'll go into a lot more detail on the monitor, identify, correct, and reporting functionality on the next several slides and provide some specific examples. So as part of the continuous monitoring component, the systems are checked each day because, as you know, something fixed today can become unfixed tomorrow. The process follows the life cycle of contract and performance up to a specified cutoff time before the performance is initiated. Each client system is a bit different in terms of lead times required to make changes, so the cutoffs will be determined by each client. The continuous monitoring ensures that the funding expected to reach a net unit cost for the ad week is properly set up in the system to receive the funding due. The process looks at total funding as well as things like overlapping contracts or stacked promotions to be sure that they are accounted for. As an example, you could have a long-term EDLC but layer on a short-term scan to achieve a promotional net unit cost for that week. The monitoring looks at the total funding by SKU, not necessarily each contract. This holistic view across your promotional calendar gives you much needed visibility and helps eliminate noise and false positives. As for rebates, any changes to a program would be monitored and any discrepancies to the calculation or program would be highlighted. So if the monitoring identifies a discrepancy, what next? So I'll go through a few examples of what would be identified as part of the monitoring process. Let's say you've got a contract in the system for yogurt. The contract was negotiated 60 days ago, but the vendor has added a new flavor and you set it up in your system. The promotion negotiated is not including this flavor, but your sales plan has added it to the promotion because it's on the same promotional family. The system would identify the SKU as not having sufficient funding to achieve the promotional net unit cost. Or let's say a contract was negotiated to run the first week of February. For whatever reason, you decide to run the ad the following week instead, and someone neglects to update the contract to reflect the new dates. The monitoring would identify the ad week as not having the funding to support the net unit cost. Another example, a contract is negotiated and set up to run, but the week prior, the vendor cancels the contract and promotion. The sales plan, for whatever reason, does not get updated. The monitoring would identify this ad as not having the funding setup needed to reach the net unit cost in the ad that is still set up to run. Another example, a contract is negotiated, the promotion is set to run, but when the allowance was entered into the system, it was entered as a unit allowance and not a case allowance. Even though technically there's a contract and an allowance, this is an error in the conversion, and the monitoring would identify the gap in funding needed to achieve that specific net unit cost. For rebates, our client makes a change to how they classify their product groups. The change impacts the way the rebate allowances calculate, or the client converts from a vendor pay to a client pay for freight in exchange for an accrual allowance mid-year. These changes would be identified through the real-time monitoring process. So what happens next when the errors are identified? There are a couple ways to address these, and the how is determined by our clients. We've received feedback that a lot of our clients have to access multiple systems and portals, and they don't want yet another portal to log into. We can accommodate that workflow to utilize either the platform or the email. Either way, the errors are identified, and then per our client's business rules, workflow is initiated at the proper stakeholder, whether it's the buyer, vendor, or both. And all the relevant information is presented, including the contract details, sales plan detail, and billing system details. So in our yogurt example, the new flavor, the missing item would be highlighted as missing from the contract, allowing the appropriate party to revise the contract with the missing item and resubmit. In the canceled contract example, the client could pull the ad from running or require the vendor to honor the original contract because there's no time to pull the promotion. The example of pushing the ad week to the following week, the vendor could be notified and asked to revise the contract to reflect the new dates. The allowance conversion example, the vendor would be notified to correct the allowance amount to reflect the case allowance. And for rebates or co-op changes, workflow would notify the appropriate stakeholder of the changes to the rebate co-op program as required. The workflow is robust and flexible enough to accommodate our clients' internal workflow and processes so as to provide minimal disruption to normal business as possible. Finally, there is the reporting functionality. When an error is identified, it is tracked into resolution with varying levels of priority based on the number of days before the promotion. The system can also use internal sales forecasts to, quote, size the prize, so to speak, and prioritize based on potential value. Lastly, using actual sales, purchase, and billing data, it can calculate what the actual value that was realized that would otherwise have likely been picked up in a post-audit review. So, in addition to reducing post-audit claims, there are a number of other sources of value that Mark will talk about.
All right, thanks, Brad. You know, taking that approach to monitor, identify, correct, and report, really in close partnership with our clients, drive the 5 sources of value that we believe make preventive audit a really compelling solution for the retail industry. And just like to talk about the sources of value and how they'll result in improved financial and operational efficiency for both the retailers and also your suppliers. First, preventing errors will result in your negotiated funding being reflected in your cost of goods sold versus down the line in the form of post-audit income. Now, reflecting this in the cost of goods sold is also going to improve the accuracy of the downstream margin reporting, and you'll get the benefits therein. Third, the reduction in post-audit claims will result in less review and correspondence related to the claims management, reducing administrative costs downstream in the recovery audit process. Additionally, when you reduce the volume of claims from the recovery audit process, in turn, it'll also reduce supplier abrasion that are associated with those claims in some cases. So that's an additional benefit. And then finally, getting it right the first time will ensure that retailers are receiving the supplier funding sooner rather than later, really allowing for the working capital benefit associated with the time value of money. Now, given our experience supporting our clients' recovery audit programs over the years, we do understand there's value associated with error prevention, and we also understand that our clients have different initiatives in place to improve upstream processes and reduce overpayments. So again, it is important to think about this solution as a complement to other process improvement initiatives for a comprehensive approach to error prevention, because it is not intended to replace any specific system or process, rather add to it. And the feedback we receive from our clients tells us that there are a number of main areas that where these improvement initiatives are. They're around deal systems, process improvement initiatives, technology solution providers, and recovery audit partners. And I'll share our observations around these areas and talk about why we feel that preventive solutions should still be considered in light of these respective efforts. So the deal systems today are superior, but they don't prevent all errors from occurring. As Amy mentioned earlier, the increased deal complexity makes complicated funding models more difficult to track. Combined with manual workarounds, errors persist. Given our experience and presence in retail, we review every deal system in the market. And what we observe is that the recoveries we produce every year in support of our client engagements are in fact increasing year over year. Errors continue to occur for a variety of reasons, and a preventive solution can be the additional assurance you need to your deal system that can mitigate the risk of overpayments and under-deductions. Now, internal initiatives focused on process improvement do have measurable impact, but again, we often see continued errors year over year. Sustainable improvement requires a significant investment in a platform, workflow, data capabilities, really to acquire, process, and transform data. And because auditing is PRGX's core business, our team intimately knows how complicated it is to address all aspects of error prevention. In addition to technology requirements, the solution will need to track correspondence, validate findings against the planned ROI, and monitor improvements to ensure that all issues are resolved. Technology solution providers can fix system issues, but they oftentimes lack the audit experience to identify all issues. System changes will fix issues, but can also be costly and time-consuming. And because technology providers often lack relevant organizational context and data knowledge of the retailer, errors persist. Experience with retail processes, retail data, and retail audits provide PRGX the knowledge to identify and prevent the specific errors that cause recoveries. And because the preventive approach is designed to work within your current environment without changing your system, it ultimately provides a more timely and efficient solution. And finally, recovery audit firms with error prevention strategies are still focused on post-payment transactions. Addressing process improvement through audit acceleration and real-time auditing can be effective, but the mistakes have already been made. As a company that serves the majority of large retailers and works with all major recovery audit firms, we believe that a preventive approach is unique in that it prevents potential errors before the promotion occurs versus identifying errors post-payment. So why do we feel that PRGX is in a unique position to take this solution to the retail industry? First, it starts with our retail knowledge. Our 50 years of experience supporting our clients' recovery audit programs provide the foundational knowledge that guides and informs our investments in the technology to enable our solution. One source of the investment in technology is in our data capability, and this is really around how we securely ingest and process large volumes of very complex data at high frequency. Another area of investment in technology is in our Panoptic audit platform that provides the technical capability for our preventive audit solution. It is this capability that enables the process Brad discussed earlier. While it starts with the data, the platform enables the ongoing analysis and reconciliations, workflow, and reporting for a comprehensive solution. And finally, we have a collaborative solution deployment methodology that will ensure we partner with our clients to build a solution with an eye on ease of use, increasing end user adoption, and delivering the value agreed upon in the business case. So when we've talked to clients about the preventive solution, the question we normally get is, okay, how can I get started? And that's what we'll talk about here in the form of next steps. There are 3 next steps that will really help you get a better understanding if a preventive audit is right for you. First, review your history of recoveries to identify claim concepts that can be prevented. And so what we mean here is let's look at the inventory of claims. Let's understand what's behind that with respect to root cause. And then really what we're trying to do is determine what is addressable from a preventive capacity. And so once we determine what is addressable from a preventive capacity, then we can assess the data readiness in support of a preventive review. So, given the process is not in place today, it's really about understanding what actions are required to make the data ready to support the preventive review. And then really from there, we'll really know what can be addressed from a preventive solution. And then finally, you need to ensure that the appropriate stakeholders are involved early in the consideration process. And that's really talking about the teamwork and support required to address it. So when we understand what can be addressed and we understand how to mobilize to address it, we can then determine what value preventive solution can have for your client environment. And so whether you're an existing PRGX client or a prospective PRGX client, we would be more than happy to work with you to see what value a preventive audit solution can add to your company. And with that, we will transition to Q&A. So there's been a few questions that come in. The first question is, I think this is for Brad. Brad, what data is required for a preventive solution?
Yeah, I can take that one, Mark. Thanks. So in many cases, we're already receiving the data needed, but just a high level, some of the data sets that we would be looking at would be point of sale, deal information, contract system data, vendor master, item master, and sales plan information.
Okay. The next question, again, I think is for you, Brad. What types of errors are preventable?
So we're not going to be able to identify all errors that you would typically find in a recovery audit review, but there are specific items that we feel can be identified up front. Some examples that I kind of went through during my section was family items or omitted items on contracts, missing deals where promotion is set up but there's no contract in place, instances where dates get misaligned, the ad week moves for whatever reason and the original contract does not get updated, funding gaps where the funding in the system is not sufficient to meet the net unit cost of the ad, and then rebate and co-op setup errors, missing offset allowances, freight and or defective allowances.
Okay. Next question has come in. Does this do away with the recovery audit completely? Okay, probably related back to Brad, what Amy set up on the 6%, so you probably speak to that.
Right. So those claim types or errors that I just talked about comprise roughly about 60% of recovery audit, specifically on grocery. So it doesn't. Things like price protection, pricing, freight, those types of things are much more difficult to identify up front because they're errors that occur at the time of payment.
Okay. Next question. How does the data get into the contract reconciliations? Do these feed from client systems or update in the PRGX system?
Yeah, so typically we would get feeds from the client with all those data sets that I had mentioned. And those would feed into this monitoring process and our technology stack that would enable the monitoring and the identification and the correction, and then also the reporting. But definitely feeds from our clients would be critical.
Okay. Another question. Does your team support on bringing all the contract-related communication in one place to make the better audit decision? This helps to avoid communication outside of contracts. So Brad, let me start on that. So we talked earlier about what's behind the solution is that the vision is that it's a complement to existing systems and processes. So in this context, we wouldn't be looking for this solution to replace the functionality of a deal system, if you will, to kind of collaborate on contracts and maintain and house contracts. So not intended to be to provide any functionality with respect to a deal system or a contract management system. However, it does take in the information from all of these systems to identify a potential error and then action it accordingly. Brad, I don't know if you have anything to add to that.
Yeah, I think it's worthy of some clarification here because where this solution sits is important. One of the things that we wanted to avoid was inserting ourselves into the supplier-buyer negotiations. So the system picks it up after the contract is finalized, and then it begins the monitoring process. So we're not getting into the vendor's supplier-buyer communications.
Okay. And then the last question we have, and please submit more questions if you have them, but does your team recommend the best possible process to build contracts to avoid post-audit leakage in the future? You know, I'll address that. I think the answer is yes. So if you think about this solution, what we'll be providing, you know, particularly when Brad talked about the reporting is, we'll report on process status, we'll report on the results, pending actions, everything like that, but we'll also report on, it'll enable us to report on root cause. So in that sense, what we'll be able to do is provide feedback to our clients with respect to the root cause and support any internal initiative that may be ongoing to fix those with system enhancements or process enhancements or whatever would be required to address that point of leakage, if you will, to stop the error from occurring. But I would say that for us, we will give the recommendations and we'll be very transparent in that regard as part of the support. However, we don't have a design to partner with clients to fix those from like a systems integration perspective or you know, process improvement perspective. But we will be very much an open book with respect to the information we share from a root cause to do anything in terms of upstream improvement, similar to what we do today, but just much, much, much closer, is kind of in support of one of the points Amy mentioned earlier. Let me give it a couple seconds and see if there's any more questions that come in. And please submit if you feel like it. Okay, I'm not seeing anything. So with that, I'll go ahead and turn the webinar back over to Ashley. Ashley?
Great, thanks, Mark. So a big thank you to all of our presenters today, Mark, Amy, and Brad. You've provided us some great insight into how retailers can benefit from transitioning into a prepayment and error prevention recovery audit solution. So thank you all for listening in on today's webinar. The recording will be added to the PRGX website along with our other on-demand webinars. And we also really encourage you to rate the webinar and provide any feedback to us. You can do that in the box below the video. So if you'd like to know more about this solution or speak with our PRGX expert, please get in touch with us at sales@prgx.com. And we thank you all for joining us today.